S&P 500. And our wave C for our wave 4 here is unfolding quite nicely. We still expect it to come down further because the fourth wave of 1 lesser degree is down through here. It's also common for a fourth wave to break the current trend line in a market, so that's all going according to plan. The move that's coming down through here, we expect well, as you know, we've been expecting it. Let's have a look at that, but we've been expecting a bit of a bounce to come in, and that bounce and come back to the 1610 before we see further down. That can be further downside through here, of course. So look, we're just working with a little rally in through here. And on the Dow Jones, it's actually easier to count that three-wave rally that started there. So we know that it's corrective, and we'll be looking for more downside. But it just depends what's coming out in headline news and so forth in terms of how extensive and how complicated a correction can be. But look, as we were looking for here the other day, we were looking at this trend channel through here and a bounce off through here. Of course, the 1600 is the largest number through here. If this does get a little bit larger than what we think here, if it becomes like a third wave would really just break through this trend channel here. So we need to be a little bit mindful of that. The English markets and the Australian markets have been coming down for a longer time than the US market, so we need to treat them a little bit differently, but of course they'll have some sort of impact if that's going to be the case here. So what we're looking for here is an ABC rally here. We can look at this as being the A wave, the B wave and the C wave back into this sort of area through here. When we look at that a bit closer here on the 2-minute chart here, it does appear to be a 5-wave structure up through here, but that would be on the futures market, and this is a CFD. Well, those prices can be based off partly cash and partly the futures there, but the Dow Jones, when we look at the cash market, is a very clear A, B and C here, where this rally here is actually part of this move to the downside through here. But we do have an A and a B and a C here, so we can class that as the rally really, or we can class it as just one swing in here. As we mentioned, the target point is up around here a little bit further, so let's just allow this to play out through here. And the same for the US markets, the US 30 rather, across the 15,000 here. We're looking for it to pull down further, but we're also looking for a retest as well. It's quite normal, as I mentioned, I think in the last video here, for when you put a trend line through the bottom where it broke out through here, it's normally retest that before it sees further downside. So look, 14,800, if we can see support come in on that, then we'd have to look at 14.9 and maybe even 15,000 as the retest. But let's just see how the market develops, because we're just really in the first real stages of this occurring here at the 14.8 through here. So we just give it a little bit more time. Obviously the trend is down. We'll be looking for some sort of bounce here. So look, a pretty quiet day ahead, at least for the Australian market and for the US market as well there. The European markets, as I mentioned, are slightly different because this is a daily chart here, and we've been looking for 5 waves down through here, and we can look at this being the 1 and the 2 and the 3 and the 4 here, and the 5th coming down through here. We were looking for 5 waves down through in this last 5th wave here. That seems to be closely in place, but I think there's another little low that could be made here. But regardless of that, this is the 6,500, which is the medium level, and we need to see a retest of that in due course, and that can either come from one more little low here, or perhaps even a bounce off the 6,000 there. But just drilling into that a little bit here, this is it here. It's a little bit sort of complicated, I guess. But look, basically 5 waves down, the 1 and the 2 here, and then from the wave 2 here, we're looking for 5 waves all the way down to wave 3 here, then the wave 4, and then last week we were looking for the 1, the 2, the 3, the 4 and the 5th here. I don't think the 5th wave here is finished. I think there can be another little low into here before we see our bounce here. Now this is important for the Australian market as well, because they do have a relationship there as well. So just on the 30-minute chart here, it gets a little bit messy in here because, you know, it's the overlay between the cash and the futures. But we can see the long third wave, the 4th and the 5th here. I just think this looks a bit corrective here, so there can be another little move down through to here. So just be careful. Let's just see this develop first before we call in another leak, because we could be looking at a low here. And of course that sort of relates through to the Australian market as well. I think that one thing that we can be looking at here is that we knew this move here was corrective. So we're expecting further downside. But in expecting further downside, we'll be looking for 5 waves to the downside. And we have got 5 waves in here. So I was kind of, you know, looking for this to be some sort of, you know, movement back up through here. The base metal markets overnight were, on Friday, they were positive. And also precious metals as well. So, but we still see precious metals as being weak, and the rally that they're currently having at the moment, the retest for gold at the 1300, is just that, it's a rally, corrective rally retest that we'll see further downside. So, but look, for the Monday, we'll see a little bit of support here. The cash market, or the CFD market, is trading lower than the cash market, so we will see the cash being brought down to this. So the 4700 here, look, I'm a little bit unsure of the wave count. So look, I just suggest that you know, Monday will be pretty flat in its own way. So we'll see more vibration across the 4700. So in trading terms, it's a matter of recognizing what will be support and resistance. Now, if support is found on top of the 4730, the top of group 1 here, then you know, you can look to go long off that, but you could also look to go long off the 4700. The 72 here, if that became the retested resistance, then you can go short from there. Of course, you can get it earlier, but when you're dealing with a large number like, well, big whole number like, say, 4700 here, then it's really important to use the next degree of pricing smaller, which would be group 1 here and group 2 here, and you know that the pivots within them are important, so the 2 and the 3 in this case to the upside, I mean that's classed as a 72 number there, because it's got the 72 in there, the 720, so you can use that because it will work quite well. So look, anyway, just allow the cash to open, see which side the futures sit on, and see what is tested support or tested resistance, and use the volume to confirm that price action as well. Alrighty, let's have a look at the gold, silver and copper. Okay, while the commodities template is just loading, I just want to look at, this is the DJ UBS commodity index, and look, as you know, we were looking at, this is a daily chart as well, and we've been looking at this structure quite often to give us a bit of direction. This is a basket of, you know, commodities as such, and we understood that this particular move through here was corrective and that more downside would eventually come. So that is unfolding, and we are seeing that, and we'll see further downside to come as well. So any rally that we do see in, say, copper here, for instance, retesting 310 here, is only short term, and it's a bounce pretty much off the 300 here, or the $3 in copper. So we should see more downside to follow. Yeah, and this is the same with, so like US BHP, for instance. Have a quick look at that on Friday. It's still moving down lower here, even though the Australian BHP hasn't taken out this low here just yet, and it's quite possible now. So, but look, anyway, this is not completed to the downside yet. But the gold market here, which has been sort of focused on a little bit more here, a little bit difficult for our gold stocks, because they're you know, because of the lower lower Australian dollar as well. So the gold here. So look, we're looking for a wave 4 pullback through here. and that would bring us back into the 1317 through here. So we're looking at, after a strong third wave, we're looking at a fourth wave, and then we'll see new lows made under this area through here. So there is still more downside to come from the gold here in terms of the wave 1, wave 2, the wave 3 of this degree, the wave 4 here, and the wave 5 to come down through there. And that's the same with silver. Silver's just doing a retest of the major trading level here, trading level 2, the $20. So this is a strong third wave. It's very obvious, and it's got its little 5 waves in here. So we'll be seeing a rally back through here. It can pull back to the 38.2 retracement level from that point to that point, which would be the 2050 here. So, we can probably, it wouldn't surprise me if we see something a bit sort of complicated sort of through here as well, if that's going to be the case here. Maybe even triangles and so forth occur in these structures. So we may see something, cross here before we see it drop to the downside. But this is a correction occurring here. It's only early stages. Once it's complete, then we'll see further downside there. The oil market as well. What we're looking for here is it's once the market's left 95, the next level down is 93. When we get a bounce off, we can always expect a bounce off 93. It tends to go back to the midpoint, which is the 94 in this case here, and then we'll see further downside from here. This just drilling in here for a moment here, we can see that this move up here is likely the A wave. This move here is in 3 waves here, so it's corrective. That means that this top here will be taken out. Technically, that's what it should do. Because it's a corrective move, it doesn't really sort of have to do that. We can look at the length of the A wave here and having some sort of relationship to the B wave, to the C wave here. So there can be further upside from here. Just wait to see if there is a new high through here. It would need support on 94 there, so it's just best to allow that to unfold. You can use the 93.72 in here, 93.72 there. If that becomes the retested resistance, then you can look to short from that point there and trade it down to the 50 and so forth. And then that correction would be that A, B, and C would be finished at that point there. But we just need to allow the week to start off, and of course this is going to follow stock to a certain point as well. So the relationship between this and the S&P 500 would be important. But we're treating this as an A and a B and a C wave that's not complete just yet. If it finds support on 94, then you need to look to the upside and start counting 5 waves to the upside. Let's have a look at FX. Okay, starting with the US dollar here, US dollar index. And we're looking for support on a small correction at 82, and then a move to 83 here. The just above that is a 61.8 relationship from this move down through to here. We're seeing this as, even though it looks impulsive to the upside, because we've got a reasonably clear 5 waves here, we have to look at getting this here in 3 waves here. But at this stage, it does look a bit impulsive. Look, that 83 there, that's going to be a bit of a brick wall, and we're going to see the euro bounce from that point there as well. So just keep that in mind in the move up here. On the 30-minute chart here, we can see that we're counting 5 waves up here, but I'm not happy with the 5 waves because wave 3 here is the smallest so far, and this is the same for the euro as well. So I've got them counted in 5 waves here, but look, that's not correct. So we just need to. It was a bit difficult because this moves so fast here. It just made it a bit tricky to work out. But it's going to be something like an A and a B three waves up, and little a, little b, little c for the A wave, the B wave, and the C wave up here. But it doesn't really matter just yet, because this little structure that we're following up here, you can see this little move here is quite strong. So that's like a little third wave here. The fourth wave will pull back, you know, the 30, 40 to the fourth wave of 1 less degree. So we can expect a little sort of A, B, C across here before we see a further upside. So there is this 1, 2, 3, 4, and 5. So there is further upside here, but once that completes, then, you know, we're going to see a larger move, a larger pattern across the 83 here, a larger correction. And this brings us to the euro, because the euro is the same to the downside as well. Now, I've also got this here labelled as 1, 2, 3, 4, and 5. It fits only if this, we could only have that as a third wave here if the wave 5 here was smaller. But already I can see that the move down through here on the fifth wave is longer than the third wave. So it's not correct. But that said, we'll adjust that. But it's either something larger unfolding to the downside, but we'll get a grip on it. But in the meantime, is that from the top of wave 4 here, moving down through here, we can see that we've got the third wave in the middle here. So we're looking at this being a fourth wave here, and another little low to come in through here. So as the US dollar's got one more higher push there to 83, this has got one more push through to here as well. So what we'll see here is we should see a move coming, this move up through here, little bounce here. It could get a little move like that before it gets a move like that. So you just got to be a bit careful about that. But let's go and have a closer look at that. So this is the reason I say that for is that this move up here is quite sort of powerful, and it's also impulsive as well. So the count coming down here is that I've got this here as wave 1 and wave 2 to here, and then this would be all of wave 3 to here, because in wave 3 we've got to clear 5 waves to here, then wave 2 to here, wave 3 to here, wave 4 to here, and wave 5 to there. Now when you have a look at all these structures in here, they count very well in here. So this would have to be a fourth wave, and a fourth wave would pull back to the third, fourth wave of 1 lesser degree, or the from here at wave 2 to here, the 38.2 retracement level, which is where it is like right now. But the wave 4 of 1 lesser degree is up here on this guy here. So I just feel there's more to be sort of had here in terms of the wave 4. So I think we've got an A here, a B wave to here, and a C wave to here, maybe even a bit higher through to here, but yeah, I don't know. But then we've got the fifth wave to come down through here. Once that's complete, then we'll see, and that will leave the US dollar at 83 thereabouts, and then we'll see a sort of larger correction here. But this is all got to do with the, you know, this 130 here is really important, because in the bigger picture, this is the top of minor group 1. And that's the same as 83 for the US dollar as well. So support or resistance, given the market some time and allowed to mature at the 130, and the same with the 83, another minor level. Well, they're the top of group 1, really. This is the top of group 1 here, and the same with the 83. So they're really important numbers. So when we look at the bigger picture, we'll be using these much more. So the Elliott will give us direction, but these numbers, the levels, will give us the right side of the market to trade on. The Australian dollar is doing a little counter trend bounce, and once complete, we'll move to the downside. So we can see that from our previous high over here, I've got wave 1 and wave 2, a nice strong third wave to the downside. So this is all of wave 4 here. Yes, look, it could pull back to the wave 4 of 1 lesser degree, which is the 93. So that's a real possibility here. Let's just have a bit of a look at this here. Didn't help too much, did it? Okay, that's a bit better. So from this wave 3 here low, I know that we can call in this as an A and a B and a C here, and pretty much finished at that point there, but we're better off calling that the wave A to here. This looks like a wave B to here, and this appears to be a wave C, well, 5 waves anyway, 1, 2, 3, 4, 5. So what we can have here is we can have the A wave, the B wave, and the C wave. We can have it complete at that point there. But what we do need to work out, be careful of, is that this 5-wave structure here may be just the wave 1 of the C wave, because we were looking for it to go to 93. So we can count 5 waves up through here. So that could be a wave 1 to this point here, and then we'd have a 60% retracement level from here, 3rd wave up, 4th wave, and a 5th wave into this sort of area here as the wave C. So that's a real possibility. If, however, we've already got the ABC in here and it's done and dusted, then we've got a different picture. Then we can start looking for the 5th wave to the downside, which we would have. Obviously, this is going to move down through here and find support here and muck around in here for a little while and so forth. But if it finds itself under here and testing, that it can't come up from these, it gets locked under here, then you know where we are. In fact, if it took this low out through here, the low here, then it would have overlapping wave structures, and you know that you would be looking for a downside movement after that. So it possibly could go to the 93, or it can just fail from this point and work lower from here. So taking out that low there would be one point in doing that. So in terms of trading, if that moves straight up there and took the high out there, then you've got yourself just go along from that point, because when you've got that situation where you've got that sort of Dow theory thing where you've got your first high above there and this pulls back, and a bit like the switch, or there's lots of other, the Ross hook or the 1, 2, 3 method or whatever, but it's the same thing, just breaking out through the new high there would get and take the money at 72. So that's what you'd be looking there, and the same sort of scenario for the downside really. So looking for a break even lower here, or using group 2 here. But anyway, definitely lower. So that's the good news, just a matter of finding a way in, as always. Alrighty, well, good morning, good luck, and enjoy the day ahead.